I'm going to state my position up front. I am a futurist, right? I take wild positions that most people think are insane, and that is what I do for a living, but that is what I believe in, and that is how I've made my money, right? So everything I say, some of it may be uncomfortable for traditional bankers. Good. I like that. If I'm challenging you, I'm not saying you're wrong, but hopefully I'm helping you think a bit more about how these things can get into your way. I typically take an extreme position on this stuff, mostly because that's the way I think about the world. I'm not asking you to take the same position as me. I'm just simply asking you to think about it. Is that cool? Cool. For those of you who don't know 500 Startups, we are the world's most active investor. I think 6 years now. That number's wrong. It's now about like close to 1,900 or something. We basically are literally all over the world, even in Ukraine. Yay! I know, for a Silicon Valley fund, I think we're being pretty active. Because most Silicon Valley funds seem to think this is the world, right? Like most Americans. But hey, you know, they don't. They even hire weird people like me who live, you know, a few thousand miles away in London. So that's who 500 Startups are. This is me. Don't I look good in that picture? So I actually, 500 backed my last startup, which I sold at the end of 2016. I then did my earnout, and then I decided I didn't want a real job. So I entered the world of finance. So now I'm a VC, and you know, I've had a bunch of exits. I'm British, so I can't talk about money, but it was I got lucky a lot. Yeah, my main thing is machine learning, AI, and I'm fascinated by behavior change, and you'll see that this is why this comes through. So a lot of my talk is about technology, but also about the behavior change that it's then encouraging, if that makes sense, right? And that's really, as finance professionals, what we actually manage. We don't really manage money, if that makes sense. We manage attitudes, behaviors, people's appetite for risk, right? Our job is, we are bizarrely like nurses. Our job is to make people feel safe about what they're doing, in part. So this is what I feel, anyway. So, come on, here we go. So, a bit more about 500. We love unicorns. We've got about 3 or 4 of them in our portfolio. Yay. For those of you who don't know what unicorn, everybody knows what a unicorn is? Right? 2 versions. One that you guys in the room like to talk about, the one that we like to talk about as former entrepreneurs, right? It's how do you make things that people thought weren't possible? And that's the thrust of my talk. How do we make things that people thought were not possible a reality? People thought, how do I find a way of saving in a way where I don't trust my government? Okay? I'm not going to ask you whether you trust your government or not here, but I realize that's something even in the UK, I don't ask that question. But I don't trust my own government, to be honest. And so, oh, sorry, yeah, this is my colleagues, by the way. We actually, no joke, that's me. We decided to go to Lake Tahoe and dress up as unicorns. We are not a normal VC fund in any way, shape, or form, because our whole thing is our business is built a lot on empathy, right? On a lot of feelings and trust. So the reason we talk about unicorns and this stuff is that our customers, who are our customers, do you think? They're the founders, right? Of course, it's officially the LPs, right? But the reality is the founders are our customers, and our ability to empathize with them and understand where they're coming from, you know, most of them don't own suits, right? So if we dressed in suits every day, it's kind of, you know, we have to be with them, not against them. Also, I don't actually own a suit, either, so slight problem. Right, this is us. We are, in 2016, we were the most active investor in global fintech, which is how we know a fair bit about what's going on. I suspect the same will be true for 2017, but obviously we haven't ended the year yet. We want to talk about AI and blockchain. Right. When everybody talks about AI and blockchain, they think, oh my God, it's this magical gift. It's beautiful. It comes shiny and crusted. Oh, it's going to be wonderful. It's going to be such a delightful thing. You know, when you get a gift, it's like, oh, what could it be? What could it be? That's really the stage we're at with AI and blockchain today. But it's not a gift, being absolutely clear, because once you open the box, you realize it's not really a beautiful thing that's going to change everything about your world and your life. I know I shouldn't be saying that. I should be saying blockchain will change everything. It won't. Are you? No God. Pardon? There is no God. I know. It's that sort of shocking disaster, shocking change. People think AI and blockchain is going to be a silver bullet. It's going to solve all sorts of problems overnight. We're going to get rid of, governments people don't trust. We're going to get institutions caught up in, scandals. No more, J.P. Morgan style. Nobody wants J.P. Morgan here, do they? Oops. Damn it. Anyway. So no more of these sorts of things. It gets rid of it all. Makes HSBC a very clean organization, not at all a bank with money laundering problems. Yay, British banks. It's definitely not a silver bullet. What it actually is something that helps us get towards a silver bullet, right? If used in the right way, it can help solve and transform problems. It can help make things understandable and accessible. Wait, I said understandable and accessible and blockchain and crypto. Most people are like, what's wrong with you? Nobody understands this stuff. So quick show of hands. Who honestly, hand on heart, knows what blockchain is? Okay, excellent, good. Excellent. By the way, if you're studying for the CFA, you better learn quickly because it's in the new exams. So it's kind of good. Who understands what AI is? A few more. Shall I go over what they are so we start from a point of view so we all can understand and talk about it? Does that sound sensible? Yeah. Good. Okay. Whoa. Who's this guy? What's he doing here? So before we go into the explanations, and I will actually do that, so I want to set this up with why AI and blockchain is so important to me personally and why I think it's a great investment thesis. Donald Trump's election, right? What did it tell the world? Or what did Americans tell the world? That they hate foreigners? Possibly. That they love Russia? Possibly. But what it actually tells the world is that Americans didn't trust their own politicians. They don't trust their own systems. They don't trust their own governments. The reality is, a vote for Donald Trump was a vote saying, I don't trust the current system, right? And we're seeing that the world over. And what's amazing about America is America is a country. People think, oh, it's got great government, great regulation, etc. I don't believe that. It has billions of dollars spent on paid lobbying. People giving money, large billion-dollar checks of money to politicians. In some parts of the world, that's kind of considered illegal, like in my country, in the UK. And this sort of behavior, if that makes sense, has caused a lot of mistrust, if that makes sense. And that's what I think we're seeing a huge global turnaround against this. In my home country, why did we vote for Brexit? Is it that we hate Europe? No, we actually love Europe. I mean, come on. Can you imagine the quality of food in the UK if we didn't have Europe so high, right? Brits can't cook. Our food's awful, right? We're about as cultured as, I don't know, a glass. We're not that cultured. But Europe is amazing. But the problem was we didn't trust the European Union government and our own politicians, right? We don't know what they're doing. All these bailouts going to Greece, all these bailouts going everywhere. I think, my personal view, obviously not my company view here, being absolutely clear, is that we just didn't know why we're giving them all this money. Why? I don't understand. Why do I, as a British person, have to do this? We don't understand. We don't know where it's going. And this lack of transparency and oversight is causing this. I mean, I love this quote. So I'm a global supremacist, right? I'm a globalization, uber advocate. I'm the child of, a multinational upbringing. My father's from one country. I was born in another. I've been educated in multiple places. I've worked all over the world. I believe in globalization, right? And the rise of nationalism, the rise of protectionism all over the world is driving us towards AI and blockchain, in particular blockchain. It's fundamentally, I love this quote, nationalism, in my opinion, is nothing more than an idealistic rationalization for militarism and aggression. Militarism and aggression occur for one thing and one thing only. Guess what? What do you think it's going to be? A lack of? Exactly. No trust. And so, you know, everything that's going on there, it's no trust. Nobody trusts these institutions. And when you're in a high growth economy like Ukraine, you've got all sorts of issues. Like if people like me in the UK I don't trust my government with my government pension scheme, right? I'm supposed to have a state pension. Do I really believe I'm going to get a state pension, even though I have to by law put in? No. Right? And that's in a country with arguably one of the finest financial services markets in the world, the most regulated, the most cutting edge, in theory. And so it's changing the way that we interact and engage, right? What's changing our relationship to money? Well, this is the one thing. So I've been doing some research. I haven't finalized it yet, so, but this is basically where it all came to go through. The less you trust your governments, the less you trust your institutions, the greater your interest in cryptocurrencies. Right? Why do we think that is? Gentlemen laughing. Why do you think that is? Yeah.
I think it's, once again, it's lack of trust and hunger for freedom to invest your money as well. Let's put it this way.
Okay, yeah. So the reality is we want to feel safe. Anybody else want to hypothesize why this is the case? No? You, sir. Why do you think that's the case? Okay, cool. I don't know. Excellent answer. Doesn't work well on the CFA exam. I don't know. But, you know, cool. Anybody else want to add in?
Well, if you don't trust somebody, you don't want them to control you, and cryptocurrency, the way to do that.
Exactly. The whole idea of not having a government or an organization that you know, almost not having anybody overseeing it, having an autonomous thing feels safer. Exactly. How on earth as an industry have we failed in financial services? We failed unambiguously. If that's the state we've got in. Partially governments, partially it's us, right? So we've got two options, really. We either get with this and use this as a mechanism showing trust and showing that we are fundamentally honest, good people trying to do the right thing. Or we keep insisting that we don't need these things and we're better than them. And as we all know, history tells us that works out well. So when I sell my last company, I'm like, okay, great. I have a wodge of cash. Now, I live in London, which is a criminally expensive city. You know, where do I put my money? First thing, houses. Right? That's the first default place. Why? Because it's an asset class we know and understand. Right? Do we want to put it in a bank? Like hell do I want to put it in a bank? Like they used to, this list of trusted professions in the UK, and I'm pretty sure it's even worse here. So traditionally politicians were the least trusted profession, right? Then it changed to lawyers being the least trusted profession. Guess what the least trusted profession in the UK today is? And so nobody wants to trust them. Obviously, venture capital funds are a great use of money. Realistically, where do you actually put your cash? And it's really hard because you don't trust the systems. A lot of the financial stuff seems so goddamn complicated, right? Look, I'm a reasonably clever person. You know, I've got too many degrees from the three most pretentious British universities, and I still don't really understand a lot of, truthfully, I don't really understand how a hedge fund properly works. And I'm like educated, and I'm a finance professional in the space, and I still don't really understand it. Most normal people don't, right? And so this complexity is causing a huge problem. And ironically, blockchain should actually help get rid of some of that complexity. I've got a lovely sigh face there over there. Why do you think that? Why do you think it won't? Go for it. Speak up. I told you this is not a session where you sit idly. Next time. Oh, boo. Okay, so, I mean, So the reason why I'll go into explain why I think it makes things simple in a bit. But lastly, and this is also a profound thing, geo-identities are starting to no longer define us, right? The fact that you're here in Ukraine doesn't mean you should be focusing on Ukraine, right? The startups we work with here, they're all focused on building from Ukraine for the world. So the money comes into here, not necessarily based on this market. In Britain, like almost all the startups I see, nobody wants to build for Britain. We're a terrible market. Most of us are in debt to the hilt. Nobody can afford to live anywhere. And we don't have money to spend on anything, you know. Really, we don't. You know, have you flown British Airways? It's terrible. It's awful. It's a budget airline. Ukrainian Airways, so much better. Seriously. Seriously. I flew it here. It was so much better. No, economy. CFA are great, but they're not that great. But this is what we're seeing. More and more identities no longer transcend borders. And this is such a growing trend for us. This is what we see, anyway. And so that's changing the way we look at money, right? People no longer want to live in just one country. People want to live in multiple countries. People travel a hell of a lot more, right? So this is changing the idea of, why do I want a currency that's basically based in one country when I'm spending my money in multiple, when I don't necessarily ascribe to all the cultural worldviews of that country? I don't trust the institutions, but I don't know where to put my money, right? I don't think blockchain will solve all of that, but it'll certainly help provide an element of trust and accountability. So let's go into that. So for those of you who don't know what AI is, I am going to skip the rather long detailed slides, but fundamentally AI, let's just call it, let's be really simple here. We used to call it big data, right? That was the main way we talked about it. The whole idea of having lots of data and using computers to understand what's in that data, because there's too much for one human being to understand, right? You know, as finance professionals, a lot of what you do, well, traditionally has been, right, how do I understand the market data, performance data, and find out just what's important, right? The whole idea with big data was it would help us take all the data that we were ignoring and seeing if there was value from it. Problem with big data was it was still like too many false signals. So the whole idea of AI, really simply, is something that self-learns, right? Being clear, it's not going to be like a child that self-learns, because if it did, it would be hard work. You'd have to like feed it in the middle of the night and wake up all continuously. I mean, it's not like people in finance industry get much sleep, right? We all work stupid hours. So, I mean, this is what's really fascinating about AI. All AI actually is, we can go through the whole like detailed slides, and we can make these available afterwards for those of you who are interested. But all AI actually is a way of having a computer programmatically look at a set of data, see patterns, and then adjust its formula, right? We used to call machine learning artificial intelligence. The reality is artificial intelligence is a term. So I was speaking with Jan Kuhn, who's the head of AI at a small internet company called Facebook. Don't know if you've heard of them. And he was saying that basically AI is basically the catch-all term for anything that we haven't yet really solved or defined, right? So 10 years ago, it was machine learning. Then it became big data. Annual funding history, AI. What's really interesting is this is essentially like the funding pattern over the last few years. The reality is it's become a funding thesis. We are putting money into AI because fundamentally a lot of people who control the money don't understand what it is, right? And it happens. It's happened historically with almost all these, with investment patterns. But the reality is that if all you understand about AI is that it's fundamentally making decisions smarter because it looks at the data, sees the mistake it makes, and corrects itself, that's all it basically is at its core level. You don't have to worry about these sorts of situations where you will have a new AI robot person that you don't know how to talk to. AI means instead of forecasting only one of 5 scenarios, you're able to do a whole spectrum of scenarios in fractions of seconds. So it kind of sucks if you want to get into finance in the next 10 years, because all the junior associate jobs are being automated the hell out. I mean, there's a view that I have where literally it's not a replacement, but it's an aid, right? The robot's not going to take over the job, but the problem is you're going to have so much more data that your level of technical knowledge and understanding is going to have to be higher, right? Because that's what historically, every time people say technology comes in, oh, it gets rid of the need stuff, it always creates another level of complexity because there's so much more analysis and output there, if that makes sense. The sophisticated financial engineering that we currently have, right, is going to get even worse. Because AI allows you to have much, much more of a complicated structure. It's much more, you can have much more variable investment patterns, right? You think algo trading is bad? Just wait till you get the AI-powered algo trading systems. You know, we were talking about stock markets earlier. I mean, wow. I mean, you know, algo trading, HFT, it's already screwed the market up for private investors. Just wait till the AI bots kick in. And the fact that individuals will be able to program their own AI bots soon. As personal investors, I mean, I admittedly do that myself, right? I have a bot which trawls Twitter, which governs a lot of my automatic stock trading. Sounds ridiculous, works for me. 15% up year on year for the last 3 years. Cannot complain. The other thing that's going to come in through is finance plus X. This is where what we think about AI, because the value of finance as a skill on its own, the core analysis, AI is going to reduce that because it's going to automate it and make it commoditized and make it accessible for everybody. And so, coming to this previous slide, our central thesis, well, my central thesis around the impact of AI is that we have to think about it on the labor market primarily, because that's what controls most things, people's work. In the past, it was good to just know about finance. But in reality, if you now know about industry as well, the sector. So say you are in TMT, in an M&A division. If you've actually built a technology company and you've been an investment banker, odds are your ability to out-execute in the middle is going to be better than anybody who's done one or the other. Does that make sense? And the value of doing that is now it's going to be even easier for these people, because traditionally you had to know so much about finance to be able to get in. You had to know so much. The problem with AI is that it does a lot of the grunt basic analysis work for you. So it's just being smart enough to be able to understand the two. And this is what I think is really fascinating and the way I believe the future of finance will be. I don't believe that the old idea of, you know, you go to a top university, you go and do your 5 years at JP Morgan, Sachs, whatever, then you go off and set up your own private equity fund, and then you retire at 35 a billionaire. I mean, that's what you've all done, right? That traditional pattern of working through just doesn't work anymore. It's going to have to involve, actually going into industry. We're going to have more and more bankers who've actually ended up retraining at the MBA level, probably then doing something like the CFA, and then getting into finance that way, and then controlling. It's because AI makes it so much easier and democratizes access to financial decision-making data. So that was the AI bit. Notice I had to separate the two. AI and blockchain, we talk about them the same. They're both transformative technologies, but they're very different things. Very different. It's a bit like saying, cheese and grapes are the same thing. You often have them together, right? They're great together, but grapes, natural, cheese, smelly. So good friends at IBM kind of came up with this description of blockchain. Why bother to rewrite the wheel? I'll stop lying. So the whole idea, so people think blockchain, it's a shared ledger for recording transactions that cannot be altered. Let's be quite frank and honest. I was at a meeting with, why can I not remember his name, from Andreessen Horowitz, one of their lead analysts, Benedict Evans. And he's like, you know what? Blockchain's basically just a distributed database. Shh, don't tell anyone. Right? We're all familiar with databases, right? The whole idea is we store data in a lovely, structured way. All a blockchain really is essentially, like, when we get into like the nuances, this is actually a pretty good example. So a blockchain is just a database where you have a record, and then as it occurs, it then goes in order. if that makes sense. So you know when everything is added to the database, basically, that it's all in order and structured. The joy of the decentralized nature means no one can tamper. There's so many records of it, no one can tamper with one bit of it without it being visible, right? So the whole idea is because it's stored multiple times in multiple places, right? It's a bit like having multiple Gutenberg Bibles, right? They're in 7 different libraries, so we can all see that they're all, if somebody wants to copy, we can check that the copies are accurate, because there's not just one copy, there's more than one copy. Shock! It's revolutionary, isn't it? This blockchain stuff, it's exactly what we've been doing with libraries for years, right? It's not that revolutionary when you think about it that way. Am I scaring anybody? Does this all make sense? Cool. So IBM's fancy way of saying is a single shared ledger that is tamper evident. Yeah, that's kind of cool, right? Knowing where the money has been and gone, right? This is where it helps us, where I talk about trust and accountability, this is where blockchain is brilliant, right? You know it's not dirty money because you know where it's been. Or if it is dirty money, you know it's dirty money, and you can price it accordingly. But that, for me, makes a fundamental change, right? Helps us really understand, and particularly in markets where we don't trust. I mean, if I control monetary policy in Ukraine, I'd be trying to put the currency on blockchain like tomorrow. Why? Because it automatically weeds out financial corruption overnight. Because you know where the money has been. And famously, lots of nations are now looking at sovereign crypto-based currencies. Even the UK, yes, e-pound or crypto pound. Yeah, it doesn't have the same ring, does it? The other cool thing about this is that it's the speed by which it does this. So, bizarrely, a lot of financial trading records, we have a lot of it still is paper-based, right? Paper records and paper trails. And that's the authority. What the hell is the point of that? Who actually goes through and looks through paper trails? Answer, lawyers, right? Who loves paying their lawyer? Hands up. What? You don't love your lawyers? Aww, I don't like lawyers too either. But that's the whole thing. Blockchain really is actually a bigger threat for lawyers than it is for you guys, right? Because this trail and accountability means you can tell whether the contract's been executed correctly or the path's being executed correctly. Oh wait, this brings me to another thing. You may or may not realize this, but blockchain is not just for money. It's not just Bitcoin, right? And we're going to go into this in a bit later, and I'm going to talk about some cool companies that are doing awesome stuff. But you could have a contract on this. You can actually settle, you could settle the trade of securities in this pattern. In fact, UBS are actually doing that in the UK right now, in a small-scale pilot, admittedly. But the whole idea is that you don't need lawyers looking over this. It just gets settled. Everything is stipulated up front. So it's really, really good for things that are structured and process-driven. But it's also really, really bad for things that need to be adjusted and altered to make the deal go through. This is why you guys still have jobs, right? This is why blockchain is not going to make you unemployed. If anything, it's going to mean that a lot of the tedious stuff goes out the window, and you're focusing much more on things that can't be settled or can't be agreed in a strict, structured pattern. Does that make sense? So that's blockchain, basically. Distributed, permissioned, secured, right? Distributed, lots of people have access to it, so there's multiple records, so it's very hard to corrupt. Permissioned, that means that you can actually control who sees what and where necessary. But the reality is that if you over-permission, people lose trust in it. There's all sorts of wars in the crypto space about this. And the idea of it's being secured. The whole idea is that everything that you write is irrevocable. So if you've made a mistake, the mistake will always go on record. If somebody does something they shouldn't be doing, it's always on record. So what does blockchain mean for labor markets, for people like you guys? So again, my thesis is based on convergence, right? Multiple skills overlapping, multiple disciplines and industries overlapping. You used to have bankers and lawyers. What do you need now? You basically just need a banker who's got good legal experience or a lawyer who's got a good appreciation of finance. Guess who's going to come after your jobs now? The bloody lawyers. First they're billing you, now they want your jobs. Boo, lawyers. So this for me is like where I'm really, really sort of, the reality is better historical signals, right? And as you've all heard 1,000 times, past performance does not indicate future performance, right? I'm sure you've written that 1,000 times in proposals, right? But past performance does help you understand a lot. It does help you understand whether the money is legitimate. It does help you understand where it's come from. It does help you understand what happened beforehand and whether any sort of dodgy trading is going on or any manipulation is going on. And for me, this is what's so exciting, particularly for countries like Ukraine. This openness and transparency means that even somebody who's never traded with Ukraine or Ukrainian companies or on a Ukrainian market can see, well, yeah, it's all legit. I can see the channel. I can see exactly where it's come from. I'm not having to go on too much somebody telling me, oh, yeah, it'll all be great. I mean, that's how London, in fairness, has built its power today. Let's be honest, London's bankers aren't better than anybody else's, right? London is built itself primarily on soft capital. We've become a place where most people trust us, rightly or wrongly. Wherever I go, this accent usually means people trust me. They're fools. They're fools. No, I'm trustworthy, honestly. The blockchain allows that transparency up front, right from the get-go. If you look at Estonia, they're a country that, let's be quite frank on us, would in theory have no right to be mentioned in any future of anything. But their e-governance plans, their ability to have everything in visible, transparent documentation format, means that Estonia is actually a credible place to think about doing things. And over the next 10, 20 years, their early investments in e-government and essentially blockchain-based approaches to government is really, really going to pay off. You've got the United Arab Emirates, who are going completely blockchain by 2020. Every bit of their government regulations, finance industry, is going fully blockchain. Why? Because they've done the math. It's not that they just want, oh, we're advancing new technology. The openness, the transparency of blockchain is what makes it work. It means people can trust Dubai instead of having to go do what Britain and America does, which is, we're great, we're America, yeah, trust us. Here's the one thing that's kind of interesting. Blockchain only works where it can be technically implemented with an algorithmic negotiation, right? Who spends all day doing algorithmic negotiations in this room? No? What? You're not all robots that just do the same negotiation, just vary the formula? No? Shocking. No, you don't. And so I think what's going to be really interesting is that are we actually going to be pressured as an industry into working in that way? Or will we be able to do variable, deal-by-deal, case-by-case settlements? I don't know. But this is an interesting role. And for that latter part, in a place where there's this really transparent but formulaic option versus one that's purely based on professional trust and integrity, that's a huge challenge. Because one will be cheaper and faster, the other will probably be potentially more lucrative, but will take longer and involves more and more person-to-person trust. But if there's one thing to remember about blockchain, it's fundamentally just a database with good record keeping. Does that make sense? Cool. So now we're moving on to what I think is actually, any questions about blockchain and AI before I talk about the social ramifications of this? Well, that's the challenge, right? These things only work as well. These are fundamental marketplace dynamics, right? On several occasions, Bitcoin has been owned by China, by Chinese investors. I don't believe Bitcoin will survive that long. Because in reality, it's an early stage thing, but the reality is that there's way too much speculation on it with no real value. I believe the reality is the governance is too poor. Right? The fact that Bitcoin is splitting left, right, and center, and there's all sorts of internal fights, means its own governance is up in the air. And it's the same thing like when sovereign currencies have bad governance, people don't trust them, right? So as a Brit, people don't trust the British government knows what it's doing with Brexit. So therefore, all of a sudden, I'm 20% poorer overnight, if that makes sense, yeah? Now, the same thing applies to blockchain, to Bitcoin. Why is that going to be exempt from the same psychological basis? And I don't believe Bitcoin's decentralized structure is is sufficiently optimal. So, I mean, the internet is famously a decentralized structure, right? But it primarily works because, in reality, nobody makes any money out of the actual internet itself, right? There's no real, the people who provide, there are some people who provide basic, like, communication infrastructure, like servers connecting to other servers, but in reality, that fundamentally becomes, it's just part of a communication stack. It's just something else that they have to provide other layers of services on top. And I genuinely believe that the future of cryptocurrencies, not just Bitcoin. Bitcoin is like what we know has made it popular, and it's great people are buying these and speculating on it because it's helping socialize the idea. It won't be the winner. Absolutely not. I think what we're actually going to see is that 51% problem is actually probably going to end up with some nation states doing amazing sovereign cryptocurrencies, where you just accept the 51% is actually owned by the British government, for example, right? In that case, if that government is trusted, it wins completely. It wins both on the transparency point of view and the trust point of view. But then there may be an element where it's hard to trust the British government because our taxes are so bloody high, right? Don't talk to me about British taxes, bloody miserable. But at the same time, there may be another non-governmental organization that can actually build the structure in such a way, or it comes as cooperatives, which essentially band together to essentially limit the 51% problem. I mean, I can see future cryptocurrencies actually being built such that no one stakeholder can have 51%, if that makes sense. So there are architectural things that you can do to stop that as well, to a certain degree. So the answer is really, it's not, don't overemphasize Bitcoin. Think about how when different people own cryptocurrencies, the 51% thing becomes actually a strategic advantage in the case of a sovereign cryptocurrency, or it becomes something that's actually used to regulate and manage and monitor. And cryptocurrencies that regularly, go above that, and once people understand this and they understand these sorts of problems, nobody will trust. So therefore, it becomes an interest of all parties who hold that cryptocurrency for there not to be 51%. Does that make any sense? That's my theory anyway. Cool. Any more questions?
What's the principal difference between the order book or the... Yeah, thank you. What's the principal difference between the order book or the tape on the stock market exchange and the blockchain? I think it's pretty much all the same because it works on the same principles, but I think blockchain is just a united system, or I'm not right.
The main difference with those tape systems is that they're single point. The primary difference is it's single point. Whereas with blockchain, it's multiple points. So therefore, things can't be doctored as easily. That's a primary one aspect. Two, the speed and what you can then do with it and what you can attach to chains, if that makes sense, then becomes different. Because you can't really attach anything onto a paper-based trail, if that makes sense. So you can actually branch off, here's one transaction and here's some related sub-transactions. You can't really do that with a paper trail. But the principle, you're absolutely right, is the same. The principle is, how do I have a non-reversible record, irreversible record that I know is safe and secure? That principle is the same, but it doesn't have the distribution function, and it doesn't have the branching function. Does that make sense? Cool. Which cryptocurrency is good?
Yes,
they're all rubbish.
You said Bitcoin is
They're all rubbish.
All rubbish.
I mean, most of my money's in Ethereum, right? But it's not truly a cryptocurrency. It's kind of a weird cryptocurrency. Look, the reality is I don't think we've got the winner yet. It doesn't exist yet, if that makes sense. There is no super duper cryptocurrency yet. It's just early in its infancy, right? In the next 10 years, we're going to start seeing a number of, it's going to be like, just as we have lots of sovereign currencies, we're going to have lots and lots of cryptocurrencies. And different ones will win favor in different parts of the world. The only difference is it won't be based on nation state. This comes down to this whole idea of globalized identity. People are rapidly moving away from having sovereign nationalist identities and moving to, right, which currency suits the lifestyle or the utilization of the money that I need. And so there won't be one winner. There's going to be lots of cryptocurrencies, and some of them will be sovereign. That's the big thing. Some of them won't be. But the ones that won't be that survive will have such good regulation, they'll put like the finest regulatory authorities to shame. I mean, and that's what's really exciting. The fact that, like, if you look at, has anybody ever looked at the regulation and the sort of the governance of Ethereum? It's fascinating. It makes the Bank of England look like they're a bunch of idiots. Right? And this is what's super exciting about it all. So, yeah, we don't have it yet in reality. But I'm just, like everybody else, short-term trading on them all.
Let's take another question. What do you think about mining of cryptocurrency? Bitcoin was appreciated from 2050 maybe for 1 month for 650, and it mostly 2 or 3 times it was appreciated during 1 month. It was because of mining, I think so. Do you think so or not? What do you think globally about mining all the cryptocurrencies?
I mean, the mining process, I personally find weird. It just seems a bit weird that you can mint your own money. But then again, at the same time, I look at what the Fed does on a regular basis. Oh, wait, country's in bad state. My name's Donald Trump. I order you to print some more money. Do I really understand? Do I really empathize with it and think it's great? No, but it's a creation mechanism. And the good thing about any of this sort of creation mechanism, it's tagged, it's traced, you can see where it's come from and how it was built. The market volatility and fluctuation, here's the reality. Your issue with mining is less to do with the actual mining process, from what I'm hearing, but actually the valuation and how it affects the value of the currency. Here's the reality. Bitcoin shouldn't be worth anything.
It was nothing, but
it is worth nothing, and it will be worth nothing at some point in the future. I didn't just say that. I didn't just say the end of Bitcoin is nigh. But no, the reality is that no, you're absolutely right. I mean, it's fundamentally speculation, right? Fundamentally, there is no intrinsic. Bitcoin is just socializing the idea of a blockchain-based currency, right? All the money that's going into it is pure speculation. It's no more better. It's no different than me going, oh, I wonder how much my Tesla stock might be worth. Oh, I'm going to buy Tesla stock because it's a great car. And, oh, I'm going to buy more shares in it because I love the car that I've just bought. That's what a lot of Tesla owners do. Me included. But it's just pure speculation, the valuation. And the mining element and the creation stuff is just the timing of the social hype bubble, really, that's driving a lot of it. The material, we don't really truthfully have solid use cases, with the exception of Silk Road. We all know what Silk Road was, right? Somebody want to explain Silk Road to the room? Because I probably shouldn't. No? Okay. Exactly. Yeah. The dark side of the web. Yeah, exactly. So, yeah, go Google it and find out. But the reality is we're trying to find more and more legitimate ways. And what's interesting about it is that the only people who are turning to Bitcoin seriously are people who do not trust their own systems of money and their own savings institutions. And that's what's driven the hype bubble. But I believe the price volatility is mostly down to people speculating on something that could be worth something in the future. Because we all know once Bitcoin fills out and every coin is issued, then we're in a different place.
Okay, that's good. But can you predict the price about Bitcoin on for 1, 2, or 3 months,
Andre?
Okay,
it's a really good question because it's
it could appreciate to it could be 0, and if
honestly,
okay.
So no, you're absolutely right. Can I predict this? I believe Taylor Swift and Bitcoin have a lot in common. Now, everybody knows you should never say mean things about Taylor Swift in a public forum because you'll get destroyed on Twitter afterwards. Those Swifties, dangerous. But the reason why I say is that when Taylor Swift launches a new record, as she just has, for the Swifties in the room, you'll probably acknowledge it's awful. But, oh God, I'm going to be destroyed on Twitter now. But the reality is it's like a Taylor Swift record. You go out there, you put it out, and then it's fundamentally social hype which drives the perceived value. It's how many column inches can Taylor Swift get there? How many people can they get talking about Taylor Swift record, which drives Taylor Swift sales, right? Bitcoin pricing can only be predicted in that same model. How much hype can you predict is there going to be? How much speculation? How many inverse things? So are there other artists other than Taylor Swift releasing records that would constrain the value? Are there other currencies, other things, other timing things that would distract money away from. Because fundamentally, Bitcoin is speculative capital. It's pure play speculative capital. It's not hard capital that people are using instead of should be buying, homes, pensions, stuff that, no, it's speculative capital, or you'd hope so. Certainly, if not, they need some good financial advice. But the reality is, can you predict it? Honestly, you can predict it about as much as you can predict how well Taylor Swift's records are doing, based on social factors. It has nothing to do with, I think social factors are driving it more so than anything else right now. Will that change in future? Possibly. But right now, honestly, it's blind speculation. I know that's not the answer you wanted. I'm sorry.
Okay.
It's the only answer I can give, I'm afraid. Cool. One more question, then I'm going to go back into the social changes. Of course.
Yep. Cool, thanks. I want to ask, is blockchain as transparent as any, not blockchain, Bitcoin as a blockchain technology? Because as I know, Bitcoin can be used for darknet transactions for like drugs, weapon and all this stuff. So if it is so transparent
US dollars.
and trackable,
US dollars can be used for those transactions as well.
Yeah,
They commonly are, but carry on.
If it is transparent, it can be trackable, so it's not logical to do it, right?
It depends if so one of the challenges is what are the real identities being used, right? If you're using your real genuine identity, then yeah, of course, you're not going to go away drugs with that. That's ridiculous, right? Or weapons or anything. But if you're using, one of the challenges of Bitcoin is that we don't have true identities. There's no identity framework, if that makes sense. And there's no validation parties. This is why sovereign cryptocurrencies make way more sense, right? You have to count off to the Emiratis for skating to the puck faster than everybody else. So the reality is, bear in mind, we think of Bitcoin. Bitcoin's an early stage prototypical thing. It's a bit like saying the World Wide Web, by which I, watch pictures, watch films of, cats doing backflips on skateboards, right? That's what the internet is today, versus at the beginning when it was just sending little, 2-character messages, right? That Bitcoin is 2-character messages. You need to layer so many things on top before you'd even think about looking at cat videos or, something that actually requires identity. Like in my country, we have, most of it's e-government. So I need a new driver's license. It's my government. I log into a website. I pay my taxes. It's all like it's single, unified identification. It's all clearly trackable and transparency. So the answer to your question is, Bitcoin? No. But whatever will be in Bitcoin in 20 years, whatever manifestations that take place. But the one thing I will say, notice I'm saying 20 years. The internet is what, 40 years old, 50 years old, right? The reality is the rate of change is the one thing that's, I think, just really, really painful about this whole thing. Because it's happening at a rate where we don't yet understand it. And that, I think, may actually be the adoption bottleneck, right? The fact that I'm here explaining this, right? Let's be honest, I only really got to grips with it about maybe a year and a half ago, right? And then, I'm an early adopter, and you guys are early adopters in this frame, right? Think about the retail consumers, right? The lady that works in the bakery across the street, right? How long is it before she ends up in a blockchain-based savings product? Probably not 40, 50 years, probably actually 5 to 10. And so this rate of change is scary as hell. And we don't know whether it's actually going to be a positive push towards or whether people will push back against it, because on the surface, it's been explained and sold so beautifully complicatedly, right? When I come in and say, AI is just, fundamentally a robot trying to learn from past mistakes, and blockchain is nothing more than a distributed database at its core, people are like, oh, really? Because I thought it was so much more complicated than that. It can be if you want it to be. But then we have to think about, we're at the top 1%. What about everybody else? Of financial understanding, that is. So, and this comes into the social changes. So what's driving a lot of interest, particularly in crypto, that I'm seeing is this. So this is a housing affordability gap. I find this fascinating. Say in the UK, you graduate from Oxford, top of your class. You go work at Goldman Sachs. You make partner in 10 years. You skipped your Harvard MBA because you are that good, right? You make that money. That should, in theory, allow you to basically live the life of kings in that city, right? It doesn't. It doesn't at all. You cannot, after that, once you do all the maths, etc., you wouldn't be able to live in one of the any of the top 5 neighborhoods in London. If it's bad at the top end, imagine how bad it is further down, right? We've now got generations of people who are coming out, some of the brightest people, right? The people currently start studying for the CFA, you know, in their 20s now. So what are they going to do? They don't realistically think, you know, if the average family house in central London, which is where most finance professionals in the UK have to live, in a nice area is about maybe £1.5 to £2 million. A £2 million mortgage? Exactly. This whole idea of like traditional things that we've been looking for, we don't know where to put our money. The base things that we need are out of reach. The things we can put our money into don't perform well, right? Savings rates in the UK, about 1%, right? Stock markets, that requires understanding stock markets, right? 99% of people don't, right? Most retail investors are just punting, right? A lot of retail investors may as well go off and go to, you know, bookmakers. In reality, you know, bet on horses. Who knows? It depends. Sometimes that's the level of knowledge. Like, oh, I like these Nike shoes. I'm going to go buy Nike shares. Are you telling me that doesn't drive a large volume of Nike's transactions on the US Stock Exchange? So this is the reality. People don't know where to put their money. And the things that we've come to trust. So this is why I sound like the crazy guy in the room. You thought I was crazy? Now I get crazier. Get ready for me to level up. So all the things we got used to, like a final salary pension scheme. Oh, those are the days. I've only ever heard of them. I don't actually have a pension. I know, mid-30s and no pension. You guys are all in shock, I know. The idea of owning your own home and the idea of a regular salary, it's gone, basically. Right? The idea, this is not what 20-somethings can aspire to. Even the bright ones. It's depressing as hell, unless you've got wealthy parents, of course. But that's the same the world over, right? So the whole idea then was like, you know, when this idea of, you know, defined benefit pension schemes, shared ownership, so I own a fraction of my home but never actually own it, which is going to be great because when you're 65, you'll own, 70 is the retirement age is now in the UK, you will own 25% of a home you live in. And you'll still have to pay rent until you die. That's really useful. It isn't, is it? It's pointless, right? And then this whole idea of gig economy working where, yeah, I'm going to go from place to place and earn a little bit here. And you know what I mean by the gig economy, right? The idea of doing lots of small contracts everywhere, like the Uber model of work or the Upwork or Elance type model of work. And yeah, it's a great lifestyle, but people are like, okay, great. So I have no stable income, no reliability, and yeah, it gets boring after a while. So where do I think this is going? I actually think we're coming to points where people no longer want pension, they want defined outcome situations, if that makes sense. So instead of defined benefits, they're like, okay, I don't know what's going to happen, but I need to make sure my rent is paid and my healthcare is paid for, if that makes sense, right? People are actually prioritizing that sort of stuff. This whole idea of ownership, this whole idea, I just can't see it surviving that long. I'm hugely personally being into co-living, right? This whole idea of people essentially, the whole idea of space being something that you actually buy shares in co-living companies. And you basically use that to, like, it's basically old school timeshares, but used for living day to day. And the other thing I think is fascinating is people's ideas of expectation. What's fascinating is now Silicon Valley startups are stealing the talent that used to go to Wall Street. If you look at where do people from Harvard and Stanford want to go at the business schools there, Goldman's, McKinsey, they're not as popular as they used to be. Google, Facebook, etc., much more popular. Why? Here's the reality. You don't get a bonus. You get shared equity. Well, your salary, the reality is that if you're not going to buy a house, you don't need a $200,000 a year salary. right? The idea is because you had that 200,000, every time you get promoted, you get another 50,000, which meant that you'd get another 200,000 that you could borrow against a mortgage, and you've got a bigger house. What's an extra $200,000 do in the San Francisco property market? Might buy you an extra cupboard that you can store a bag in, right? And so these changes are fundamentally forcing people to rethink. So the idea of shared equity is that you go work at a startup, you earn a lower salary of maybe, you know, or even someone like Facebook or Google, or famously Amazon even. You have a lower base salary than you'd earn in, say, finance. But the reality is your equity in the company is actually meaningful. So one of my good friends from university, he's been at Amazon for 5-6 years. He literally bought half his house with his Amazon stock options, right? And this is a beautiful, large 5-bedroom townhouse in Hampstead in London, which is a beautiful, beautiful part, very nice part of London to live in. And so this whole idea of I may get equity in what I build is seen as much, much more appealing, because the reality is that I don't need to save for houses because I can't bloody have one anymore. So I want more of the pie. And the idea of corporation, so this is changing the way we think about money, right? It's changing the whole way that we build. So the traditional products that we had before of savings of, you know, fixed rate savings, bonds, you know, or, you know, pensions, etc., doesn't really make that much sense. And so this is where I think what's interesting about the future of it. So what does blockchain enable? What does AI enable? It enables new types of products to be created. We don't know what they are yet, right? And if you do know what they are and what they could be, let me know, because I want to invest my money into it, right? But this is what I'm looking for personally as an investor. How do you use these technologies to create products that meet these sorts of people's needs? So this is an example of a co-living organization in the UK. And I think they're doing something really, really interesting, which is fractional usage. Rooms starting from £230 a week. I don't know what Ukrainian rents are like, but in London, that all in Zone 2, Zone 3 London, it's actually okay. It's actually like so much more affordable than typical if you were to get a mortgage on a similar base property, and even to be able to save the deposit. And that's what's making it work. And that doesn't look like a terrible place to live, does it? It's a bit small, but, you know, everybody lives in shoeboxes in London. Sorry, okay. Where's that gone? Oh, no, we're missing a slide. Hang on. Sorry. Oh, no. Okay, fine. We are missing a couple of slides. Okay. It may not. So I had some problems converting the slides to PDF, but I'll just talk through them instead. So this whole idea of the things that I find interesting, so like an interesting use of AI, for example, in this space. These people are not used to saving because they don't know what to save for. Most of them don't believe they can save because they've been spending so much money on rent, for example. So there's a great company in the UK, one of our portfolio companies, full disclosure. It's called withplum.com. It's Reese Mart. It connects to your bank account, sees how you spend your money, and using sort of AI and machine learning methods, learns your spending behaviors. It then automatically takes out the income that you don't need to spend, but you could spend, and are probably spending on pointless things, into a savings account. Right? I mean, let's be honest. Even as a room of financial professionals, we are awful at saving by and large, right? Who is good at going, yes, I know I'm very good, I have a fixed budget, and I don't go above my fixed budget, and I always save the same amount of my salary every month. Hands up, who does that? You, sir, hats off. I wish I could be you. I wish I could. Most of us can't. And so this is what I think is really interesting. It's giving a generation of people who don't believe they can save visibility that they can save. Does this make sense? This is a neat application of. It literally does it without you thinking. It's actually a chatbot even, I kid you not. It literally talks to you, it goes, hey Saalim, you know, you really shouldn't have been spending £1,000 on drinks at a bar, you know, etc. Oh wait, okay, you know, that sort of stuff. So, and it's like, and it says, it'll tell you, hey, I put that into your savings account so you don't spend it. You can always take it out if you want to spend it, because it's just two accounts linked back and forth. There's no risk of thieving or things going elsewhere. So it's just back, forth, and you can, you know, so it's beautifully elegant and simple. The other thing I've been really excited about are smart contracts. Totally fascinated by them. There's a company called Monax, which is the technology that UBS are using. And it's literally the whole idea of using a blockchain, not for currency, but just for keeping a record, right? Keeping a record of the pricing at the time, what was sold, when it was sold, to whom and where, and forever having that through. And it addresses the problem we were talking about before around identity, because this blockchain is designed to have institutional identities for what's been going on. So, and it gets around the problem of individual privacy because the institution takes the risk of knowing the customer. So because they're decoupled databases, you have that level of privacy, if that makes sense. So UBS would have its own understanding its customer database, but then UBS carries out the trade. And so so if regulators required, they could add 2 and 2 together, but day to day it's not. So that's my understanding of it. I'm from afar. I don't work for Monax. I don't work for UBS. It's just my understanding from afar. So these are the things that I think are really exciting. Those sorts of implementations of what's really of things like AI and blockchain. Those are 2 real-world use cases. But here's the thing: it's like this is the world I think we're needing to build into. Right? This is personally my investment thesis for fintech, by the way. Shock horror. And AI and blockchain-based startups. It's how can we get to this world which enables people who don't think they can save, who have a different approach to money, and how can we make them feel safe about investing their money with us, right? What's fascinating is when you take it to countries outside of the Western markets where there's general trust in infrastructure. We talked a lot about Turkey today. Anybody from Turkey here? Yay, cool, awesome. Do you trust your government with money? Do you trust that the financial systems are going to actually pay through that they say they will? Yeah, it's really common. And so the idea of just being able to look to, people don't have time to wait for regulators to get their act in gear. People don't have time to wait for institutional trust to be created. And so for me, I'm really excited by this whole idea of the decentralized piece, giving that opportunity for people in those markets to basically have what in theory looks like a safer-based alternative. Would you rather trust, you know, I mean, even me as a Brit, would I rather trust the British government to manage my state pension? Or would I trust an organization that's been upfront about what it does with my money, that I can clearly see what's going on at any time? And that, I think, you know, there will be the advent of the blockchain inspectors, the public blockchain inspectors. But yeah, there's going to be a huge, huge boon in organizations that validate blockchains and help tell you what's inside the blockchain, right? That, to me, is honestly where I see the future of finance. You guys are the guardians, in reality. You guys are trust brokers. If everything is on a blockchain basis and you can't understand it, what have you guys been doing for years? Teaching people how to trust the financial markets and institutions and services. So, yeah. So that basically, with 10 minutes to go, wraps up everything I wanted to talk about. So, you know, just to recap, don't be afraid of AI. It's just a system which learns from its mistakes. Don't think blockchain is the scariest thing on planet Earth. It really isn't. It's just a fundamentally distributed database with multiple copies so that we know that they're accurate. And they self-check each other to make sure they're accurate. Where is it going? It probably means there's going to be a lot more automation in early stage financial analysis. That, to me, is the key thing. So it's going to be a lot more about industry domain knowledge as finance professionals, mixed in with the ability to read and understand the enormous output from the AI-based systems. And lastly, the blockchain allows a level of transparency and visibility, but most of it is not visible or understandable to the vast majority of consumers. And I do feel it's going to be our job to educate them. So that's everything. Any last questions before I wrap up?
My question is if you have heard of the cryptocurrency called IOTA, and if you have, what do you think about it?
No ideas, never heard about it.
Okay, thank you.
First of all, thank you for one of the best presentations I ever seen. That was great.
I'm very flattered, thank you.
Oh, no problem with that.
I'm British, I can't take compliments.
Well, now it's going to be less flattery.
Yeah.
Is artificial intelligence going to replace you sooner or later?
Me as what? A human being, a investor,
As a social functionality, or as a business entity, or as a business actor?
AI fundamentally is only as good as the training data you give it. AI is only good at single functional dimensional things, areas. The idea of a utopian AI that knows everything and can take my entire 30 plus years of experience on this earth to make decisions, we're a long, long way off from that. And secondly, even if we do get there, it still is a point where it's fundamentally lots of discrete binary processing systems. The idea of the systems integrating and overlapping, that's a problem that AI cannot do very well. And we don't know how to solve that, if that makes sense. So you can build an AI bot that really understands how people's behaviors around price sensitivity of toothpaste, for example, right? But you're not going to be able to build an AI that understands my human emotions when I go to a retail counter and when I start looking at my options of toothpaste available to me. I use a simple act of buying toothpaste because that's really not that hard, right? Marketeers for years have been able to empathize and understand and look at triggers, but they're all emotional. Until AI can really, truly understand emotions, human beings are not going to be completely replaced, but they are going to be complemented. They're going to provide a huge amount of data that we didn't have before, and they are going to basically make predictions. Now, the biggest problem with AI, what could replace, is that we errantly trust computer systems more than we trust human beings. We often trust them without knowing their full field of vision and the full data set that they're working with. That is the biggest danger of AI. People automatically assume, there are people who assume, okay, like the sat-nav problem. Okay, Google, tell me where, sorry, it's the standard where my whole house is like Google automated. So I'm like, when I come home, I'm like, okay, Google, turn the lights on and tell me what's been going on in the world. Lights go on, the news broadcast comes up on my TV. Okay, Google, make me a cup of coffee, right? It can tell all these actions, but it doesn't know how I feel. It doesn't recognize that, oh, wait, I'm putting the lights on, but I'm a bit sad. So I probably actually want the lights to be a bit dark. And I'm not feeling very happy, so I want to watch cheerful television. And the coffee I want it to make, I need it really, really strong because I'm feeling really, really down, if that makes sense. So until AI can read human emotions, it's not going to replace human beings. A barista, on the other hand, could do all of those three things flawlessly.
Thank you very much. You rather been talking about augmented intelligence instead of artificial, looks like that. Augmented reality, well, now I can transfer that over to augmented intelligence. That's rather what you're saying.
Yeah, I mean, artificial intelligence is automatically always going to be a complementary. It's artificial, it's not organic.
Thank you.
Thank you, guys. So can we do the question? Do you really want to get this, or do you want to do this afterwards? Okay. Go for it, go on.
You've just had an interesting, for me, you just had an interesting slide, CFA vs MBA, so maybe you could comment a bit.
Oh, good God, that one, yeah. Okay, let's go back to it. So, there we go, that one. Okay, so this comes from my last startup. So my last startup was a talent marketplace for freelance business consultants, mainly in the financial sector. It's now part of TopTal Finance. TopTal is the world's largest provider of of high-value, on-demand developers. They're complementing it with finance professionals and business consultants. So we were building machine learning systems. So I'm a developer. You may or may not have realized from the fact that I can't talk in public, that I'm kind of shy and reticent, whatever. Anyway, so we were looking at these things, and so when a due diligence piece for a large private equity came through, here's what was really interesting. Different people work with different attitudes. So a lot of the reasons people were hired was down to, people